Hi, everyone. Thank you for joining us during the week of the United States of America's 250th birthday. We're excited. I apparently everybody to get the memo about the red, white, and blue. But hopefully you're having a fantastic week. And if you're in Minnesota, you are staying cool and safe during some rocky weather that we're having. Quick introductions. I'm Michael Matheson with M2 Financial Group. With us, we've got Marie Henricks, Scott Robichaud, and Susan Anderson. And very, very excited that we're able to put this presentation on for you today. As you can imagine, AI and technology are things that come up on the absolute regular in our conversations with our clients, and I'm sure that you have the same conversations with friends and family. So we're very excited to bring this presentation and hopefully shed some light on what we think is happening in that space today and looking forward as well. Absolutely my pleasure to introduce a longtime friend, Terry Huddle. Terry's a senior regional consultant with Columbia Threadneedle Investments, which is a huge international firm. Terry has more than we were kind of arguing about this, Terry, right? Because I think we've known each other for most of these years, but 30 plus years of experience in the financial services industry. And fortunately, we both started when we were 10 years old, if I remember, Terry, somewhere
10,
in that
11,
ballpark.
something like that, right?
11. Terry's been helping financial professionals navigate investment strategies, market trends, and portfolio solutions for that entire time, and has been a tremendous resource as well as Columbia Threadneedle Investments. So today, Terry's going to share his perspective on the current market environment and investment opportunities, as well as with a big, big, big focus on what's going on in AI, how we use it, what it's looking like today. So please help me in welcoming Terry Huddle. In the meantime, we're going to hide our beautiful faces and sign back on with you. Now, along the way, if you have any questions, please feel free to throw them in the chat. We've already had a couple that we look forward to sharing the answers with you at the end. So again, feel free to throw those questions in the chat, and we'll go from there. Terry Huddle, thank you.
Okay, thank you, Mike. And thank all of you really for joining this discussion. We're going to focus on investing in specifically on artificial intelligence. We're going to talk about the impact and the opportunities that it's creating, and we're going to cover how AI is transforming the technological landscape, how it's affecting our daily lives, and ultimately how it can affect the economy and our portfolios. So, before we jump in here, let's just start off right with something that everybody knows already, and that's maybe you don't appreciate the scale, and that's really how technology is the dominant force in the markets today. The tech sector of the S&P 500 is the largest and it's the fastest growing sector. It's been the best performing sector for over the last 2 decades, and it's certainly the most innovative. Actually, if you look at these numbers, we're in the process of updating these numbers. So anything you hear number wise from here on out, just you can probably add another 10 or 20% to it. But these are, if you take the technology sector and the communication services sector, which includes companies like Google and Meta, or same company, I guess, Netflix, et cetera, that's over almost approaching $25 trillion, right, of the global economy. So a huge and growing dominant force in today's markets. And Mike, if you can advance, one way that we can think about why the tech sector has been so successful over the last decade or so, it's by looking at the outsized impact that tech has had in driving the world's economy higher. And one way that we like to think about that is in what a phrase we call, or a term we call, tech intensity. So the blue bars on this chart show the global GDP. And you can see going back to 2009, global GDP has grown roughly from $60 trillion to, oh, geez, over now probably close to $110 trillion today. And over that time, the tech intensity or the global spending on technology has, as a percentage of global GDP, has actually doubled from 1.7 to 3.2%. So that means the importance or the intensity of driving global GDP higher has grown exponentially. And tech is actually gaining a bigger share of global GDP at the expense of other sectors. As a matter of fact, it's approaching, if it hasn't already exceeded, the total amount that the world spends on agriculture, which was at about 4.1% of global GDP. Go ahead, Mike. And actually, over that time frame and even earlier, technology has really been changing the world. But we think that tech's true impact was really felt when the internet launched in the early 1990s. And AI is doing much the same thing today. And we're going to talk more about that later. But here we're looking at a chart of global internet users, that light blue line on the top. And we're also looking at, on the dark blue line at the bottom, the growth of the NASDAQ, which is an index, kind of a proxy for investing in technology companies. And you can see that over time, as the internet evolved, as it disrupted the way that we did business, as it grew in users, so generally did the value of the NASDAQ, of those tech companies, right? So, which brings us to our current year, 2026, not 2025, but the current year. And what we're thinking the next big thing is, of course, it's AI, and more specifically, generative AI. Go ahead. So, why is AI the next big thing? Well, it's actually already a big thing. AI in particular is scaling at an unprecedented rate. If you look at past tech revolutions or innovations, um, what really being early in some of these technological revolutions have really paid early adopters or early investors pretty handsomely. And we don't think that AI is going to be any different. The difference, though, is maybe the pace with which this is being adopted. So this chart showing, if you go back, I guess, 50 years or so ago when the PC first rolled out, that dark line on the bottom shows it took about 12 years for adoption in the US to reach about 40%. So, in other words, 40% of American homes had a PC, and it took about 12 years. The light blue line or dark blue line there is 12 years ago when the internet rolled out. It took about, 25 years ago when the internet rolled out, it took about 12 years for that to reach 40% of American households. And that light blue line on the left, that's AI. When it rolled out in 2022 with OpenAI and the news there, it literally took about 2 years for 40% of American households to start using that. So, you know, maybe if we go back to that last slide, Mike, I always like to just point out, companies related to the internet have generally been a really good investment. Just as an example, even despite that dot-com burst back in 1999 into 2000, felt terrible at the time. You can look, though, over time, again, ups and downs, winners and losers in the internet world. But as an example, technology, as it evolved and as it adopted, and as people started using it, those technology companies just generally kept going up in value to the point where we're at today. So, Michael, go back. One more. So that with that as a little bit of a background on why it's so important to be paying attention to AI and its impact on the world, let's talk about a little bit about what AI actually is. And AI feels like magic. It really is not. I don't know if you've monkeyed around with some of these, but it is mind-blowing to me how quickly and how great some of these AI programs work. But really, what AI is on a really basic level is it's a result of massive data sets and predictive algorithms. So the true definition of AI is the ability of a machine or a computer to imitate human intelligence. It learns, it reasons, and it makes decisions. So most AI models rely on data classification to generate massive predictions and responses. So I don't know if you've heard of the phrase LLMs, stands for large language models. That essentially is going, that large language model is essentially going to look through in an instant the internet, scouring the internet for every text, every image, every video, every document on a question. And then it starts to quickly classify that data in a way that helps it make a prediction. And that, on a really basic level, that's what AI is. It's a prediction based on the data that it was able to find and to package. And so AI's ability to find, to package, and predict data has evolved quite a bit. Mike, if you can do advance. It's evolved quite a bit in the last decade or so. If you look at this chart here, these pictures here, this is a result of a competition, an annual competition that a bunch of computer nerds, computer engineers would have in Silicon Valley, trying to help make AI better, trying to help predict data. And really, it was a moment that a lot of researchers agreed jump-started what's been called the deep learning revolution. This is when a lot of folks outside of those groups of computer nerds started paying attention, right? So essentially, what they found a way to ask the computer, what is this? And that picture of the left there, the computer said, well, it's a cat. So that's what we call classification, right? Then they asked or found a way to get the computer to, when they asked, well, where is the cat? The computer was able to localize it. That's called localization. So that little red line or box around that cat doesn't seem like a big deal, but it was a seminal moment that has led to where we're at today, where literally you can speak a prompt into generative AI programs and make a whole cat video out of the deal, right? So it's advanced very quickly in the last decade or so. And just to be clear, Mike, if you can fast forward. AI is a lot more than just cat videos. It's already here. It's affecting our daily lives. And the interesting thing about it, a lot of people don't even realize that they're using it. So Gallup did a poll a couple of years ago, asked people, have you used an AI in the last week or so? And 36% of 4,000 people surveyed said, nope, have not used it. About 15% said they were unsure. And about 50% said, no way have I used any AI in the last week or so. So the researchers then went on to ask, well, in the last week or so, have you used a virtual personal assistant like Apple Siri, like Amazon Alexa? Have you used a navigational app like Apple Maps or Google Maps? I always like to joke in Minnesota, one of our favorite pastimes is trying to figure out what the weather's going to do. Have you used the Weather Channel app or any weather forecasting radar app? Have you got on Facebook? Have you streamed any movies from Netflix? And have you ordered anything from Amazon? And of course, when asked that follow-up question, almost everybody, except for that little gray guy in the upper right corner who lives in a shack in the woods, almost everybody said yes. I have apparently used AI in the last week. As a matter of fact, 90% of the people have used 4 or more of those AI programs in the last week or so. So it's already here, and it is more common than people realize. And it's really not just individuals. Now we're starting to see AI being applied in business and actually all sectors of business. There's a million different examples we give you, but just as one of my favorites ones in an effort to improve help desk. One study showed that client service representatives that had access to an AI assistant, those help desks apparently ended up being about 15% more efficient. I am all about better help desk. That's right. So advertising, Facebook has plowed a ton of money into this new AI program they call Meta Advantage. So I don't know if any of you have ever had that experience where you've talked about something and then all of a sudden it shows up on your Facebook feed or in an email. This AI program apparently is their Facebook is getting about $4.52 revenue for every dollar spent on this program. That's a 22% increase in productivity over their former traditional advertising campaigns. And Meta and Facebook are spending about $50 billion towards this annually on this AI. And in healthcare, AI is really accelerating drug discovery and diagnostic accuracy. There was another recent study by the National Institute of Health. They used an AI program to see if they could improve the diagnosis or the um, detection of melanoma in patients. And they found that these AI programs were at least as good, if not many times better, than dermatologists at diagnosing and locating melanoma on clients. So obviously can be used to better patient outcomes and whether it's patients or business across the board. Somebody have a question, Mike, or did you? No.
Nope, nothing yet. Just reaching
Okay.
out. If you do have any questions or thoughts, feel free to share them in the chat.
And lastly, one of the main questions that we get about AI is how is it different than the traditional programs that we have? Um, Picture here, like if you think about the old programs, and this one, just like if you ever had one of those Garmin or TomTom navigational apps, the traditional programs are what we call deterministic, right? So you would plug in an address or a fixed input, and the traditional programs just kick out fixed outputs, right? So, if you had maybe your TomTom or maybe your Garmin device would maybe give you the shortest route. But generally, if you, I always say, like if you were a fan of the sitcom The Office, I don't know if you remember that episode where Michael was going to live and breathe by 100% by technology, and it ended up his navigational device ended up driving him into the lake. Um, what's different about the AI and the generative AI is that it is what we call probabilistic. So it's not just taking the fixed input and giving you fixed output, it's taking into consideration all the data that's changing or that has been updated on a constant basis, right? So it's figuring out what the traffic conditions are, what the road conditions are, what the weather is, what there's construction, and it actually learns and adapts to your driving style as well. Might even give you some suggestions. If you look up coffee shops every day, doing a query at the same time, it might start suggesting where the nearest Starbucks is, right? So it's deterministic versus probabilistic. And that, again, is really just trying to predict what would be the quickest way for you to get from point A to point B. Again, a predictive algorithm. And I don't know about you, I really have a love-hate relationship with the suggestions when would you like to take a faster route? Sure, I would like to save 5 minutes on that route. But my only problem is, why do you have to give that suggestion to 200 other fellow commuters? Because then all of a sudden now my new route is seemingly jammed up as well. So still in progress on that. So we talked a little bit about what AI is. Why don't we now talk a little bit about some of the investment implications? And we'll start with the big picture, really, and that's how, Mike, if you can advance. Let's start with how we think it's expected to transform the global economy. Because remember, AI isn't just a tool, it's really an economic engine. You're looking here at a chart of previous technological advances or previous areas of technological productivity, eras of productivity gains, like the Great Depression. Frankly, you had high productivity gains during that era because people could work longer because we had electric light bulbs that we could screw into the factory. We had the combustible engine. We had electricity. Uh, Post World War II, you had high productivity with soldiers coming back, technology that was used for tools in the war being applied to business. Of course, you had the internet era here at the turn of the century, high productivity. What's interesting though is we've actually been in an area of low productivity gains, and I should be more specific. We're not talking productivity totals, low productivity gains or advancements. And the reason we've been in a low productivity gain environment is because we're already super productive here in the United States. But that's really why countries and companies are plowing tons of money into AI because it's shown the ability to really raise economic growth across the board. So we expect AI to really be that next era of productivity gains going forward. Actually, McKinsey, or if you maybe go back just a little bit, Mike, our friends at McKinsey, big consultant firm, did a study on the internet and that decade that followed its introduction. They thought their determination was that it added about 10% to global GDP. And again, we think AI is going to be every bit of that 10%, probably more additive to global domestic GDP, which means if we take that 10% as the baseline onto where global GDP is today, we're looking at global GDP in the 130 to 140 trillion dollar range. Thank you, Mike. There we go. And so expectations are pretty high. It doesn't come without any challenges and some risks. We could probably have a whole nother presentation and deeper discussion on all these different risks, but some of them. And again, another recent poll, 72% of Americans believe that AI is going to negatively affect the spread of false information, fake news. You see some of these generative political ad campaigns. Pretty amazing. So, 60% of Americans believe AI is going to negatively impact individuals' opportunities to get a good job. I think if you ask any recent college grad, that number is probably more like 99%. And then 56% of Americans believe that AI is going to have a negative impact on national security or privacy and security in general. As a matter of fact, just anecdotally, there was again, another little, not survey, but experiment done with an AI application on privacy software, on security software. They found that this one particular app or soft AI program could detect with 90% accuracy what your password is just by listening to you key it onto your keyboard, right? So a lot of potential risks to go right along with that opportunity. And again, maybe a deeper discussion, but we do know that people are extremely interested in investing in, Mike, if you can advance. They're not just looking for AI, they're looking for companies enabled, powering, and benefiting from AI. If you can see this chart here of Google search trends really started spiking up in 2022 when OpenAI was launched. And again, within 2 years, 40% of American households started using it. So the interesting part about investing directly in these direct AI companies, these large language models like OpenAI and Anthropic and some of them, is that you can't. They're all private companies right now. Now they have plans that to go public. We don't know when, maybe this year, maybe next year, but you know, a lot of folks have been really interested in it because of just what they're seeing, but also seeing the phenomenal performance of companies like NVIDIA, which is a company that makes the chips that power these data servers. or run these data through these data servers. The problem is, I think, with that is that companies like Meta and Facebook and Nvidia, you probably already own them. Or if you have an indexed ETF or maybe even a mutual fund, these are some of the largest companies in the world. So they're already in a lot of these indices and a lot of these investment funds. So what we think the opportunity is in what we call the pickaxe and shovel part of AI. It's the companies that not only make the chips like Nvidia, but it's the companies that clean them, that test them, and then there's the whole nother area of impact around the infrastructure that's needed to power this boom. As you can see on this chart here, the expansion in AI is creating just a real world demand for energy and for data storage. Our analysts estimate that we're going to need over 7 times the data center square footage to meet the demand of all this AI infrastructure in the next 3 years. So the energy needed to power these data centers is estimated to grow at over 400, 500%. In fact, the rapid growth in AI right now, we think is going to require about a $10 trillion, $7 to $10 trillion investment in infrastructure. That includes the buildings, to where the warehouses needed to house all these data centers. They're going to need HVAC and cooling systems, power. We're going to have to upgrade the grid to power some of these in some of these locations. And then, of course, you're going to need jobs, particularly construction jobs, to build these data centers. And interestingly enough, if you look at that line on the chart there, demand for electricity for these data centers is expected to increase from 3% to 17% of all US energy consumption by 2028, which is pretty amazing. And I think what also is pretty amazing is that this infrastructure boom is really kind of democratizing this AI boom. And it's not just in Silicon Valley and California, it's happening across the country, particularly in what we call the Rust Belt states. Data centers need a lot of land and they need a lot of power and they need water for cooling and they need people to build them, as I mentioned. So what we're seeing is places like Columbus, Ohio. I don't know if you think AI boom when you hear Columbus, Ohio. I think Ohio Buckeyes, but Columbus, Ohio has about 40 data centers around it right now. Every one of the Mag 7 has a data center there. Intel is building a $28 billion data center as we speak. And it's essentially been kind of a new California gold rush that is not just limited to California anymore, spreading across the country. Which, we've been talking mainly about this from a US point of view. And there's reason for that. US is home to the most innovative and biggest and best tech companies in the world. And obviously the concentration of these tech companies here in the US has been really the force for our stock market's outperformance across, frankly, a pretty subdued global growth economy. So our market is rocking and rolling because we're the biggest, best bullseye for all these tech companies in the world. But really, there are some fast growing tech companies outside of the US as well that we don't think should be ignored. And we're taking here at Columbia Threadneedle a little bit more of a global view on investing. We think it actually could make sense. Of course, you have to be in these companies here in the United States, but don't sleep on Korea, Japan, and in particular France, as they've got some fantastic AI hubs that are starting to produce. And again, hopefully, maybe the opportunity to invest in some of these emergent companies and technologies before they become Meta-sized and Apple-sized and Amazon-sized. And finally, just want to give maybe a little commercial about how Columbia Threadneedle, my company, can help. As you know, as you can see, I guess, we actually have been invested in this space for over 35 years. We have actually a really big tech franchise. We're now at about $45 billion of assets that we invest in technology-focused strategies with one of our larger teams dedicated to that. We have about 35 portfolio managers and analysts specifically dedicated to the space, and we're pretty good at it. So not going to talk anything specific there. I'll leave that to the experts at M2 Financial to discuss, but know that we have a really keen focus on technology, and we have some of the best strategies in the sector.
Terry, that was awesome. We had a number of questions and probably the most interaction that we've had in a while with one of our webinars. So the content is obviously striking people a little bit here. Scott had a question that he wanted to share with from one of our viewers.
Yeah, Terry, Mike, you want to mute? Terry, the question is, what are your thoughts on on-site power delivery? Seems like the existing grid will never be able to support data center build out at the projected pace. On-site power
Yeah,
delivery seems like the only option. What are your thoughts?
that is the bottleneck, Scott. I mean, insatiable demand to power these and not only power them, but cool them off. They generated an intense amount of heat. That's why they need access to water and cooling. So there are some companies that are not technically technology sector companies or even communication services companies that I won't name names, but there's one, if you pay attention to the markets, you might have seen amazing performance year to date in this one particular stock and company because this company has proprietary technology fuel cell technology that a lot of these data center, these large language models, these AI companies are signing up with this particular energy company to basically have create that energy on site, not an off grid. This enables these folks, these large language models and these AI companies now have to go through a pretty lengthy and extensive permitting process to get the approval for them to tap into the local utility lines. Then they often have to upgrade the electrical grid and the utility lines in these jurisdictions. And so what this one particular energy company does is allows them to bypass that, generate the power right there on site. And these data centers that want to be built and need to be built right now are able to really advance that process and that procedure within a year and a half versus maybe 3 to 5 years of permitting process.
Terry,
So
that's awesome,
that is
Terry.
one thing. And then I guess the other thing that SpaceX and Elon Musk has talked about is orbitable data centers. I don't know how close we are on that, but he's and others, and Amazon included, are talking about putting data centers out in the vacuum of space, which has infinite amount of solar power and pretty efficient cooling in the vacuum of space as well. Of course, that is not something that's going to happen in the next year and a half or 2 years, probably more like 5+ years out. But again, looking for solutions to this big bottleneck right now, which is powering the grid and its insatiable demand for building them and for powering them and cooling them off.
Yeah, Terry, we had another question come in that's right along the same lines. Especially in Minnesota, we've seen public resistance to data centers. Do we think that that's going to impact the continued growth and development of AI?
It could, yeah. I mean, it's a slowing down of the process, and part of that permitting process, right? That drags that on. It could be drug on in a lot longer than the power center or the companies want, right? They want to build these things right now, and they want to power them up and tap into the local infrastructure right now. Uh, Obviously, any discussion about that is could bog that down and slow them down. So that's why they're looking to energy companies like the one I referenced for alternate sources of power and cooling in the HVAC center. So absolutely, it could. As a matter of fact, last year was the first year that the United States placed number two in AI spend. China beat us for the first time ever last year. Beat us by about, I think they spent 120, oh, I forget the exact number, but they beat us by several $billion in spend towards AI infrastructure. And clearly, China doesn't have if they want the permit process to go through, they make it happen, right? So, little different political situation in China than here in the US.
Terry, on that same kind of vein, we've had some questions about how not to use AI. Is that something that you've had any experience with?
How not to use AI?
Yeah, if there's any specific organizations out there that are marketing not
Oh,
utilizing it.
no, I've heard more of the other way around, right? So going back to that 2 year to get to 40% of US households adoption, the big question for investors is how is that going to translate into how are businesses and enterprises going to start utilizing AI and technology? And think back to when Mike and I were 11 years old and got into this business. CEOs of companies, they had to make a decision about whether or not they were going to make a tech spend. And today, it's not a question. You have to have some of this technology in some form in your businesses, or you're going to be left behind. So it is, Marie, not so much a question of which ones aren't going to be using it. Maybe we can get into what's going to be impacted more immediately. But eventually, I mean, we didn't even talk about mating AI up with robotics, right? So I think right now, they talk about unless you're pushing atoms, in other words, digging ditches or hooking up fiber optics and that sort of thing, it's definitely going to affect your career, right? You can run a pretty sophisticated diagnostics tool on your company. You can, again, um, you just think about some of those industries. Like I've seen people put pretty like legal forms together using some of these AI programs. So there's definitely maybe a risk to that. There's always been technological advancements. I think the fear for a lot of folks is that maybe this is happening so quickly that you won't have a chance. A lot of folks won't have a chance to adapt to it. But for example, there's no TV repairman anymore. There's no typewriter repairman. There was no horseshoe stable guys anymore when the car came out. But I think if you look at it optimistically, a lot of those companies and careers, at least they're for sure going to be affected, but they also can be enhanced, right? So, and it's going to be the lawyers, the doctors, the careers, and the businesses that use AI to enhance what they're already good at. And if you're not, it's probably there's always going to be a people element to this thing. And so if you're good and you can utilize those to enhance what you already do, should be pretty good for a bit. That was a kind of a long-winded answer. I don't really know what to say. We don't see any companies that aren't saying, "Heck no, we're not going to use it at all." If we do, it's probably in the people business, right? So
Yeah.
there's a reason people pay a lot of money for an Armani suit. for a tailor-made car. AI could probably make a Ferrari or a Rolls Royce or a Bentley or an Armani suit, but people are going to still probably pay for that experience or for that quality of a handmade thing going forward. Does that kind of make sense?
Yeah, that's good, Terry. I've had this question three times, and I think we'll get close to the end here as we're coming up on time. But is the investment worth it? So these companies that, like you mentioned, it's not a matter of if, it's a matter of how much they're going to spend, and is the spend is it worth it? Are companies being profitable? But also with the stock prices being so inflated, a lot of people are remembering the great bubble, the tech bubble
Yeah,
that burst years and years ago. Are we in a
I
position
remember it.
to see something like that happen?
Yeah. Yeah, that's a big question. Are we in a bubble? I totally understand that. Mike, you and I again lived it back in the day. Um, I think that the main difference between the dot-com era and what we've got today is that in the dot-com era, there were the PEs, the price earnings ratio, which for all of you is a measure of how expensive a stock is. You take the price of it and you divide it by its earnings. Back in 99 and 2000, those numbers were astronomically high on these dot-com companies because there was no E in the earnings, right? There was no E. They didn't have any money coming in. So they got a lot of funding money, startup money, and they didn't have a business model yet. It took a while for that adoption and for businesses to start using it, for us as consumers to get to 40% of US households. So they blew through their startup money. They had no money for research and development and for growth. And the dot-com era, there was a rational exuberance around anything dot-com, right? Today, these companies, the big ones, they are sitting on mountains of money. The earnings are through the roof. I don't know if you saw this last quarter earnings blows it out of the water. I think it was 26% earnings, right? So, and frankly, I don't have a chart I can show you here, but I'm looking at it right now. The PEs back in 1999 were on average of the NASDAQ, by the way, were 40 plus times earnings. Today, they're at about 23 times earnings. Profit margins, there wasn't any profit in 1999 in the NASDAQ. Today, profit margins are at about 30%. So, long way of saying this isn't going to be a straight 45-degree angle performance up and to the right on tech and NASDAQ. There are going to be winners and losers. There are going to be hiccups and or air pockets along the way. We do think this is a ripe environment for companies that have experience understanding the markets, understanding these trends, and figuring out where the next Microsoft is. What parts of that pickaxe and shovel part of AI infrastructure is going to be needed and is going to be a winner, right? So we think active in this space, particularly right now, there's going to be malinvestment. Money is flowing into this for sure, and they need to keep raising tremendous amounts of money. That's the question. Is business going to adopt this and enough to get return on investment for some of these startup, for some of these companies that, again, aren't even public yet? So,
Well, Terry, I think it's fascinating to look back because we all have our devices now, but there were two major names back then, pre-tech bubble, BlackBerry and Palm, who basically
right,
owned those markets, and they
right.
don't exist anymore. So there are going to be some names, and to your point exactly, I think of active management in this space. There will be some names, big companies that will look back in 5, 10 years and say, "Wow, remember that? Remember
For sure.
that old Palm Pilot? I was so proud of my Palm phone, Terry."
My Pom Pods. I had like four of them along the way. I thought it was so technologically bad. By the way, another great story. At one point, Netflix tried to get Blockbuster to buy them. Blockbuster could have bought Netflix for $100 million back in the day, and they said, no, we got our deal. We're not going to improvise. We're not going to adapt. And look where we're at today. So
stories abound like that, right? And again, 10 years from now, we're going to be telling the same stories, and who knows who's going to be there at the root of those stories.
Yeah, for sure. Again, you're going to have air pockets. It's not going to be a straight line up and to the right, but it just met with one of our portfolio managers on one of our leading tech strategies last Monday. And they've been saying for a couple of years, oh, we think we're in the early innings. So of this, if we put it in baseball terms, and he said, I think it feels like we've been saying that for a couple of years. So maybe we should be in the middle innings on this. But this particular portfolio manager said, I'm more convinced than ever we are in the first or second inning of all this with all the different tentacles that AI can reach. And again, not just the AI large language models, but the infrastructure, the companies that make and build those data centers, that make and build those chips, that test those chips, and then all the ancillary business that is starting to already kind of spring out from this AI tech revolution. So
that's great. Yeah,
long ways to go.
We had a couple of other questions, but we're at time right now. And I think that what this has raised from our side, Terry, because this is fantastic material, is that we're going to continue to provide resource on AI and look for opportunities to help you as our clients how to integrate more AI other than just Hey Siri and other than never mind. Other than that and Amazon and all that kind of business, how you can use it to improve your life. So I've got clients that make their grocery lists and make menus for the week. We had a friend in the office here that they had a completely unplanned trip to Europe, and they said, okay, well, this is where I'm going to be or actually they just uploaded their agenda and said, give me the top restaurants, the top sites, the top this, the top this. And it's amazing what gets populated in this. So we're going to do our best at M2 Financial here to throw some more opportunities for you as our valued clients to learn more about how to integrate this fantastic tool into your lives. And we hope today was good. We hope today gave you a good baseline of what some of the thoughts are from us and from the industry and from one of our very valuable partners with Columbia Threadneedle, and especially Terry. So thank you, Terry, for taking the time out of your beautiful weekend. And I'm glad you had power. Terry's dialing in from Isla, where he did not have power until about an hour before we were supposed to start. So
I was going to need some on-site power generation here this morning.
Oh, it's awesome.
About an hour before. So
yeah, as always, thank you all for tuning in. We had a big crowd today, which was awesome. Any questions about this or anything else, as always, feel free to reach out to our team, and we'll be happy to chat about this more with you. And as always, as well, if there's a friend or family or somebody that's important to you that is just interested in chatting about their financial future and their potential need for financial advice, we always offer our 20-minute Ask Anything meeting for those folks. If they're important to you, they're important to us as well. So very, very, again, thankful, Terry, and to Marie, Scott, Susan as well. Thank you all for attending again, and we'll stay in touch. Thank you. Enjoy the birthday party this weekend for our country.